I want to welcome you all to our AI Trading Summit with myself and Rob Roy. Rob, how you doing this evening?
Good, Tom. How are you?
It's been a while. It's been a little while since you and I have done something together.
It's
Um,
been a minute, and I'm excited to be here with you again.
this this is cool stuff. This is really cool stuff. I'm really happy to be hosting this event with you. And before I go any farther, we got a lot of folks that are joining us live. If those of you that are with us right now, tell me where you're from. All right, let Rob and I both know where you're coming in from. I'll let you know right now. I'm live in Sarasota, Florida. And this is Florida's this is the place to be during this time of the year. However, we're getting to the end of the good weather and the beginning of they always say there's only two temperatures in Florida, hot and hotter, but it's been quite nice. But Rob, you're coming from someplace a little different.
I am. Yeah, I'm up just north of the Blue Ridge Mountains and the Appalachian Mountains there in western North Carolina. And
And
I think you're familiar with the area, if I
you know
remember
what?
correctly.
I got to tell everybody. So before we began, I let Rob know, and I knew Rob was in North Carolina because he's up there every once in a while, but I didn't know exactly where he's from. And I said, Rob, my wife and I were just there 2 weeks ago in the Blue Ridge Mountains in Blue Ridge area looking for cabins. And he's like, "Oh my gosh, I'm 10 minutes away." So it's exciting to know that Rob's already blessing the area and telling us it's a great place to go when you don't live in Florida. So, we're excited about that. And so we'll see where we end up going with that. But anyway, we're glad that you guys are all here for this informative, groundbreaking information that we're going to share with you tonight. Before I get any farther, I want to let everybody know that let's just put the disclaimer on the screen real quick. You can read this in its entirety. All you got to do is we're going to be sending you a recording just after this, and you can pause the recording right here if you want to read this word for word. The only thing I'm going to say, and then we're going to move forward, is that both Rob, myself, the folks at Elliot Wave Options, we're not investment advisors. We're not money managers. We're educators. And we're here to show you how it is that we trade and navigate these markets, right? That being said, obviously you need a broker to trade with and you must meet certain requirements. And everything else that you need to know about, as far as this disclaimer, you can read it on your own time. Now, while I'm also saying that, for those of you that don't know me or you want a little refresher on what I've been doing over the last, couple decades, and really how it relates to AI, that's where I've got a pretty broad story that goes back to 1986. But I'm going to share with everybody a little bit of my past when it comes to, let's say, the early 90s. About the time that Optionetics was coming around, I was also working on a piece of tech with a company. It was mobile trader tech. And it was basically one of the very first wireless trading devices. This was back in the early 90s. We ended up selling that to a big communications company, all right, around the mid 90s. And that was at the same time that Optionetics was really kind of getting its sea legs, if you will. And lo and behold, when myself and George Fontenills were part of Optionetics, and all of a sudden we were doing this just to get off the floor of the exchange, along comes one of our very first one of our very first students, and it was Rob Roy. And Rob was, I like to say Rob was a contrarian trader before I even knew what the word contrarian meant. And if you know anything about Rob, then you can understand that. But it was also really good at taking contrarian strategies and repeating them. So, in a sense, Rob had a trading system back then, whether he knew it or not. I've known Rob for over 20 years. He is one of the best traders out there in the business. I'm excited to be doing this with him. I mean, Rob and I have been working on and off for over 2 decades now. So we're excited to share this information with you. And what we're talking about is our AI Trading Summit. Um, you know, there is a lot of knowledge in this business. And a lot of that knowledge is, and in this business also, I want to mention this, the word AI, it gets tossed around a lot in this business. And so most folks that are out there, when they say AI, basically what they've done is they've taken the initials AI and they have substituted that for what used to be called technical analysis. So they really haven't changed what they're doing. They're just spicing up the words a little bit, right? So what's so different about what the average person does with AI and what we're doing with AI? What we want to talk to you about tonight is what we call true AI. True AI is where, it's not just words. We're talking about taking our best trading systems and best trading strategies and with hundreds of different pieces that AI adds to it. What AI does is it takes our trading strategies, it scrutinizes them, it scrubs them, it optimizes them. And it really takes what we call artificial or machine learning systems to the next level. And we're excited to be talking about that. So the agenda for tonight, what we're going to be covering tonight, is we're going to do an overview of real AI performance. We're going to talk about an AI system example using Elliot Wave setups. So if you don't know what Elliot Waves is, that's okay, because we're going to talk a little bit about the foundations of Elliot Wave, how AI works. It's how it's changed our trading approach. We're going to talk about real world AI examples and how you can use these signals in your own trading. So that's our plan. That's what we're going to cover tonight. And before I turn this over to Rob, I want to mention this. Rob, do you and your family binge watch? There's times like during the holidays where we take time off from our trading because there's just not a lot of volume going on, and somehow we'll end up on the couch binge watching some Netflix series. You do that at all?
Absolutely. And Suits is one of my favorite Netflix
Oh
series
yeah.
to binge watch. So yeah,
Okay,
absolutely.
so I started watching that one, and I think I'm probably into season 2 or 3. But Yellowstone's probably the one I could talk about the most. It's not on Netflix, but it is a series that people binge watch. In fact, it's on all the time, except for the series, the end we want to see. It just because of a writer's strike, it's been off for a while, and we're all waiting for it. But you know, to me, when I'm binge watching a series and I want to see how it ends, I hate to say it, but I grab my phone and I Google the series and quickly scroll through to see who dies in the end, who's the winner in the end, who's the hero, who's the villain, and it does kind of take out the surprise element from it. But unfortunately, that is the rules based trader in me. I don't like surprises, and I thought for tonight, let's fast forward to the end of this entire presentation and let's just get right to your results. Okay, can we do that?
Absolutely.
Let's do it. So that's pretty good. That's I mean, that right there, this right here is an attention grabber to me. 82% winning trades, 29% ROI. Your account ROI is over 100%. And the average number of days in a trade, which is to me is if it's below 30, is fantastic. I hear so many people say, "Oh, I can make 100% in a day. I can make 100% in 2 days, or in 24, 48 hours." Maybe so, but do that over and over again, then you got my attention because there's nobody I know that can do it then. But I really believe that as a trader, the sweet spot is somewhere north or south of 30. And if you can get it south of 30, even better. And that's what you've done here. So, tell us a little bit about how you got to the end of this road where you are right now.
Yeah, first of all, Tom, I'd like everyone to know, because I think everybody knows you more than they know me, is that in the world of trading, I started over 27 years ago and I made a lot of money, and then I lost a lot of money and realized I needed to go listen to somebody that knew more than I did. And you were my mentor. You were the one that got me on the right track in this. And I think as a mentor, as a parent, whatever, what we all want is for our students, children, whatever, to achieve success. And I hope that you're proud of the success that you cultivated in me, because without the studentship of being under you, I don't know if I'd be in this place. So I wanted to give you some kudos there for getting me on the right track. But yeah, the performance here has been pretty amazing, and that's just in, as you can see, performance. It says hypothetical portfolio performance, but these are actually real trades that have been sent out to our alert subscribers. And when we finish the March numbers, these are through February, as you can see. That's going to tick down just a slight bit on the number of days. So we're just under 24 days average. So it's been pretty impressive. And, I give you all credit for putting me on the right track, Tom. And so if we take a look at, here's the actual performance over the last 6 months. Again, these are real trades that have been sent out to our subscribers. So our subscribers have enjoyed all of these results. Going back to September, you can see, yeah, well, maybe we kind of, stubbed our toes out of the gate a little bit, but still a profitable month. And then from there, it's been amazing.
So
And
Rob,
so,
what you've done is I know you've been trading this yourself for decades. I know you've been teaching people how to do this for decades, but this is the first time or that I can see that you've really put your money where your mouth is when it comes to actual trade performance. And you've got a small group of people that you kind of beta tested this with that they're following you, and the last 6 months look good. Now, let me ask you this: this is obviously with AI kind of helping you out, correct?
100%. Yeah,
Okay.
I had,
And the
you
reason
had
I
mentioned.
asked, the reason I asked is because, I mean, I've known you kind of as a contrarian trader for years and years now. And, I know you have winners. I know you had losers. I know sometimes you losers, you go, wow, how did we lose this much money? And sometimes, and of course, winners look good too. But then there were some winners where sometimes you look at it and go, man, we left a lot on the table on that one. Or more importantly, why did we pick this stock that went up 5% when we could have picked this one instead that went up 15%? And if there's an option trade to that, then the leverage on either of those would be night and day. And now the AI has a lot to do with the way that it comes out and says, oh, you need to focus your attention here and not here. And I'm sure you want to talk a little bit more about that. But again, real-time track record. Are you keeping tabs on this, or is there or do you actually have an outside group that's or a different group that's verifying these trades for you?
Yeah, your points are 100% spot on. I developed a system. One of the things that you taught me as a mentor is to have a system, be a system trader, and then believe in your system. And I did, and I had pretty decent success over the years, a lot of years. And then AI came into being, and it was the folks at Hub. We'll talk more about that as we get through the presentation, hubb.com, that had data scientists that were, I think, leaders in the field. I really believe that. A lot of conversation on the financial networks are where AI is going to be the future of technical analysis. They were already doing it. And I talked to them and said, hey, can we work together? And they took the searches that I had, the criteria that I had, and they basically supercharged it by adding in the AI to it.
Yeah.
And you can see the results here on your screen. Just over the last 6 months, if you'd started with a $5,000 account, you've more than doubled your account in 6 months. And as you mentioned, it's the AI aspect that is just really taking it to a whole new level, right? That's what we always talk about, taking your trading to a new level. You took it to a new level when you became my mentor, and I learned under you, and just have continued to evolve from there. So that's
Also,
really the history of how it's
I
gone.
might want to mention too, this is not buy and hold, because, and I know this because you had 24 days on the clock as far as your average trade, your hold time. So it's definitely not buy and hold. Um, the average trade, less than $500.
Yeah,
Okay.
and that's the amazing thing. I went back to this slide because you mentioned it. Yeah, less than 24 days in a trade, and when people look at those results, you might think, oh, well, you had a few really good trades that bolstered your account. You a few big winners because a lot of people do that, right? And they market that they had a big win, and then
Mhm.
they make it sound like they have consistent success. But no, you're correct. Our limit for risk per trade is $500 or less. In fact, our average is down around $360 per alert that goes out. So this is a lot of consistent winners. It's not just a few big winners that have generated the returns. And I think that's
Yeah.
really an important point to make.
So, Rob, why don't you go through and give everybody kind of a basic understanding of what impulse waves are, because that's the strategy that you're talking about tonight.
Correct. Yeah, let's go through it. Basically, the market moves in impulses and corrections, and that's the crux of Elliott Wave. You mentioned Elliott Wave. Some people may be more familiar with it than others. If you're new to Elliott Wave, don't worry. We'll give you a quick rundown of how it works. But basically, what we did was take a system that's been around for over 100 years that I started working with based on the knowledge I gained from you, Tom, and then we added in the AI. And I do think we are really the leaders in the field. An important point to make in this, and of course, the market's been moving up mostly since the end of COVID. But this works whether your market's moving up or down. So when we get to the point where we have a down market, it'll work just as well, if not better. We all know the markets move down faster than they move up. So it's a directional trading strategy. Doesn't really care what the direction is. And so we're targeting stocks that are in a trend. And so if it's an uptrend, which most of the stocks have been in lately, or a downtrend, either way, the AI gives us signals. And the key here, as I'm going to go through and explain the Elliott wave part of it, is how the AI kicks in and it measures the strength of the move. So it's not giving you a reading on the Elliott wave pattern per se. It's giving you a reading on the strength of the stock within the Elliott wave. So you kind of have both pieces moving here. So whether or not you're a believer in a general Elliott wave impulse pattern, most people can see that out on the internet. But this is where I come in, Tom, and you talk about me being a contrarian trader, and I am a believer that when the market when everybody views things one way, the market's going to go the other way. Zigzags within the world of Elliott wave are viewed as corrective patterns. So you could look at them as being a contrarian, but I think that the people miss out on the fact that you can trade zigzags within impulse waves. I've had so many people come in and say, "Oh, I've never heard that before." That's something that people haven't looked at, and I can tell you that it works extremely well. So we profit both from the movements in the stock and yeah, we always hear about IV crushes, right? When the implied volatility is high, you go buy options and then the IV drops and it hurts your options. People that have been right on direction and haven't made money on their options, you bought a call option, the stock went up and you lost money or you didn't make any money and you're wondering why. That's where the importance and one of the things that I learned from you is you better understand the Greeks if you're going to be in the world of options trading. But the other side of the coin is that if you get a stock that's in a strong impulse move and it's moving to the upside or the downside, implied volatility rushes in. So if you're buying an option and then the implied volatility goes up, that's like a cherry on top. It's added gain to your position. So that's what the IV rush means. And we use varying strategies depending on the situation, straight calls and puts, vertical spreads, butterflies, a lot of different strategies that are out there. And I want to be really clear that if you're fairly new to the world of options and you're starting to see, vertical spreads and butterflies, that sounds really advanced, and I'm not sure that I know that. The majority of these signals that we get, because of the fact, as you highlighted, Tom, it's short term. The majority of the signals are sent out as alerts as just straight calls and puts. So there are times when maybe the IV is already too high. So we'll put on a spread, or maybe we have a directional benefit. One of the things that I learned from you is that you can make butterflies directional. You don't have to have them as sideways. So those are strategies that will be put in here and there, but we'll educate you on those. You talked about the power of education, but the vast majority of the trades that we've done so far are just simply straight calls and puts. So I don't want anybody to get upset about the fact that they look like, oh, these are really advanced strategies, and I don't know about that. And for those of you that are not really familiar with Elliot Wave, here is a very basic rundown of how Elliot Wave works. You can see on the chart here the labeling 1, 2, 3, 4, and 5. The stock moved to the upside, and the question becomes, well, why? How do you know all that happened? Well, here's the rundown in very basic terms about how Elliott Wave works. Normally, you have a stock that's had a directional move, and then something starts to happen to change the move. So in this case, since it's an uptrend, an uptrending impulse, the stock would have been moving lower, and it'll be running out of gas. And then you get a bounce to the upside. It's normally weak, a little bit of short covering, people taking profits to the downside. And then the key here is that when you get this next corrective move, some people are saying, oh, the downward move is still going to continue. We're going lower, but it makes a higher low. So the higher low is established, and that's key. And that's what the institutions look at, and they start saying, hey, this is an opportunity for us to get in before the retail public gets in. And so you get this strong wave 3 of institutional buying. Then the wave 4 pulls back. That's when the institutions start taking profits. And this is the FOMO thing, right, Tom, that we've all been hearing about lately. That's what's going on in the market now. And that's when the retail public comes in and says, hey, that stock's made a big move to the upside. I want in. And that's where wave 5 comes in. That's the retail public coming in, and the retail trading is nowhere near as strong as the institutional trading. So at some point in time, that wave 5 is going to run out of gas. And this works in all time frames. So those of you that like to trade, I watch the futures on a 3-minute chart every single day, Tom, and it works the exact same way. So whether or not you're looking at an end of day daily chart, or whether you're looking at an intraday chart on a 3-minute, hourly, whatever time frame you're looking at, the patterns all still play out the same. And it works for all securities as well. So if you're not familiar with Elliott Wave, I encourage you to get familiar with it, and don't just read the basics that are out there on the internet. Learn it. Nothing worth having comes easy. I'm a real big believer in that. And Elliott Wave is not a simple strategy. It's complex. And that's why we educate people on it. We want people to understand it. We want them to really know what's going on. So, if it was that simple, if it was that easy, I don't think it's worth having. So Elliott Wave works extremely well, but it's not a simple strategy. But with all that said, what you really look at is, what are the results? What's the bottom line? And so you can see, you look at these patterns, and in parentheses there, those are the corrective moves. And that's where the Fibonacci ratios come in. You start looking at where the Fibonacci ratios are going to hit. And then you have these projections on where the stock is likely to go. And it happens a good percentage of the time. So if you can generate something that's better than 60%, right, you're pretty good. I think you'd agree with that, Tom. You have a system that's 60% or better. That's in the upper echelon. But what we've done, based on the results, you saw that we've had an 82% accuracy rate over the 6+ months, and we haven't added the March numbers in yet, which were solid as well. Now you start to talk about, man, you are really in that top 1% or even underneath that. And so as a reminder to everybody, this works whether or not you're in a bullish or bearish trend.
Let me add something real quick. You talking about, just off the bat, and I think everybody in the room is going to go, yeah, because there's a stock out there that's just become the meme trader's dream, and that is Trump Media. I don't know if you've seen what's going on with this one. But it is quickly. It looks like it's tapped out at a wave 5, and the last couple of days of price action, are telling us if we get getting close below 60 and probably in the high 50s, this thing is well on its way to reversing course. So if you want to get a real good look at a stock today that is pushing the Elliott Wave, look at DJT. And that really tells the story of what Rob is talking about right here with impulse patterns, and more importantly, when the impulse is over.
What do those initials stand for? That's an odd symbol, isn't it?
I have no idea.
Yeah. You're 100% correct, though, Tom. And that, one of the things you lead me right into this is people have their favorite stocks, and the fact that the way Elliott Wave works is you can have multiple opportunities. Every single impulse pattern starts with an ABC pattern. Now, we don't know at this point in time whether or not this is going to be a flat, which is an ABC sideways pattern, or whether or not this is going to be a zigzag pattern where the wave C goes to the upside. In this case, it was a zigzag pattern. Every single 5-wave impulse pattern starts with this ABC move. My argument is, why do we have to wait? Why can't we get in when this starts? And that's what we'll talk about more as we go through. And what happens is once this relabels into a 1, 2, 3, we now have a confirmed impulse pattern. But I want to be clear, it started with the ABC, and that's a zigzag pattern. So this 5-wave impulse pattern started with a zigzag. So we can trade that, and we can have multiple opportunities within the same pattern. So you have that trade within the wave 3. The wave 3 is widely viewed as the strongest of all waves, even for people that aren't real familiar with Elliott Wave. I think you probably have heard that before. And then you get your correction in the wave 4, and then you get your move to the upside. And Tom, you mentioned, people have their favorite stocks, the meme stocks, etc. When you have a favorite stock and you watch it and you get used to how it moves, my favorite stock is Google. I've done more trades on Elliott Wave on Google than any other stock out there. There's other ones that are close, but Google's number one. So if I had a favorite stock, Google would be my favorite one. But people get used to, right? You get used to a particular stock and you just watch the patterns. You watch how they play out. And you don't have to just have this one opportunity. You can make a nice gain here and then continue to watch it. And then once you've had that move in the wave 3, after the wave 4, you can get another move within the wave 5. So rather than what a lot is talked about out on the internet in the world of Elliott Wave is let 1, 2, 3, and 4 set up and then trade the wave 5. Well, do you really want to trade only with the retail public, or would you rather trade with the institutional traders? They're the ones that have the big buying power. That's where the strongest move is. So my argument is, let's not ignore that. Let's embrace it and trade along with them. And then if it is a stock that you're really married to or are following, keep an eye on it and wait for your next opportunity. And you can continue to have trading opportunities following your favorite stock. So yeah, there's a lot of those out there.
So, Rob, this is, I mean, so what you've basically done is you've kind of covered the impulse pattern. You got a good 5-wave, an idea what a 5-wave pattern is. Is there, when I look at this, I also see that you have, and you're just showing it now, you got 2 different opportunities in here that you typically look at and you've been using for years now. What's the difference between the first one and the second one where you show these 2 different trading opportunities on one pattern?
The interesting thing, Tom, is they're in general terms, they're the same pattern. So here in the wave 3, this 1, 2, and then 3 to the upside is a zigzag pattern. That's within the wave 3. And then you look at the bigger pattern, starting with the 0 point, which is key, and then you move up to the 3, and then the wave 4 pullback. That's a larger zigzag pattern. So what ends up happening is in this wave 3, that's a zigzag, and it's a zigzag pattern within the larger pattern. So the first pattern is known as a complex wave. So the wave 3 was complex, and when you have that, you are aware that, hey, we're likely going to have another opportunity. Since this was complex, we're probably going to have another pullback, and then we have that second opportunity in there. So it's 2 of the exact same pattern, just one is larger than the other one. But the interesting thing is the smaller of the 2 patterns is in the stronger way. So it is counterintuitive. a little bit, but yet you have multiple opportunities within the exact same larger pattern. So it's
Okay,
awesome
so
stuff.
tell me how AI gets involved in this.
That's a great question. So that's the general world of Elliot Wave there. A lot of that you can read out there, but hopefully we've added to it. But now let's get to the point where we say, all right, that's great, but let's forget the charts and start talking about Elliot Wave. And I started talking with the folks at Hub, again, hubb.com, because I was aware that they had automation from creating program trading uh, to enhance the systems that I had created already. What I wasn't aware of is that they had already hired data scientists and were involved in the world of AI. And they said, hey, we can take what you're doing and apply our AI to it and really enhance it. And I talk about I'm no Elon Musk or anything. I've always joked with people. I just don't feel like I'm a visionary type of a person. But one of the things that I have done right in my life, so pat myself on the back here, is I did see that AI was going to be a powerful influence in the world of technical trading. So where I don't normally have that ability of foresight or seeing into the future, et cetera, this is one that I was right on. And so when they mentioned, hey, we can take your searches and let our data scientists run with them and create an AI system out of them, I was all in for it. And so that started back in 2020. So that's during the COVID days. And the very first alert that I ever sent out based on AI was back in 2021. And what happens now is the AI takes the search parameters and applies their data points to it. And then we add the Elliott wave count to it. So I want to be clear that the AI is not analyzing Elliott wave, it's analyzing the strength of the move within the Elliott wave pattern. And so then we look at the Elliott wave pattern on top of it. And then when we get both signals, that's when we look for the trade setups. So the data scientist had since extensive input data. It's over 300 data points that they look at. Now here's some of them, and when you look at those, they're like, well, price and volume indicator values, comparisons, economic cycle data, company options data. I can find all that. Yeah, you can go out and find these things on your own on the internet, and if you have the wherewithal and the computer power to assess all that data, then yeah, those things you can do on your own. But they took it a step further and they went into these models that I don't really understand what they mean: regression, clustering, random forest, ensemble, neural networks. I actually asked them, what in the world is a neural network? And they told me that basically, that in general terms, is that you give the AI a problem to solve, and then the AI solves it. That's what a neural network is. So this is way beyond my pay grade. I'm pretty darn good at Elliott Wave, but this is taking it to a new level. So this is Elliott Wave that no one has seen before. As I said, I think these guys are leaders in this entire marketplace of applying AI to general Elliott Wave. And it's not just the Elliott Wave, it's all these data points. And on top of that, there's more than 300 data points. So what I did was I reached out to these guys and said, hey, please give me an idea of what you're looking at. And this is what they sent me. Now, on the top of that is a coding of each one of the data points. There's over 300 different data points that are being analyzed through the search criteria that I've given them. It looks like a dot plot, right? The first thing I think of is we always talk about the Fed's dot plot graph on whether or not they're going to raise rates, et cetera. But what you're wanting to look at is the clustering. That's the key. Where is the majority of that coding agreeing on what's going on? So these outlying dots, those don't matter. It's the clustering that you look for. And then they sent me this and said, here are the top 36. Now, remember, there's over 300 data points that they're analyzing. This is just the top 36 of the most data points that the algorithm is analyzing. And so when you see the clustering within each one of those individual charts, imagine the power of you look at, okay, where is this one single data point finding the greatest amount of agreement? And then they take all of those and put them together and find out where are these over 300 data points all agreeing. So all these outlying dots, forget those. You look for the clusters in each one of those, and then the AI analyzes where's the agreement in all of these, and then they give it a score. So there's a scoring from the AI after analyzing all these. When we look at where the clustering is in each one of these individual coding data points, and comes up with a score of here's where all of these agree, and this is the percentage of accuracy that the AI has come up with. So if you can imagine seeing graphs that look like this with all of these clusters together, and then the AI saying, hey, this is where they all agree, I think you can start to see the power and the potential of that. Nothing's 100%, but 82% in the world of technical analysis, I just don't think there's many people that are out there doing that. So let me run
No,
back and show.
there's
Go ahead.
not. Yeah, there's not, Rob. Hey, you know what, Rob? I gotta say this too. I'm looking at all these graphs, and you and I are both kind of data nerds. I mean, we're able to look at this, and we got an idea because we've been working with this technology for a while now. But for the average person, the folks, for a lot of folks that are looking at this right now, I mean, some of them are probably looking at you and they want to congratulate you. I mean, Rob, are we pregnant? This looks like a sonogram. Looks like a bunch of sonograms to me. But I mean,
It
seriously,
actually does. It actually does. That's
yeah.
a
But I
funny
mean,
point.
seriously though, what do you or what does what does the program that you're doing? What does it do with all this data? How does it take all of this and turn it into the very best trade at that time?
Well, I contacted the data scientists and I asked them for an explanation, and I didn't really understand what they were saying. And we don't have the proprietary data. That's for them. We get the signals from it. But here's the gist. Here's what I care about. Here's what traders should care about: is they send us a chart that looks like this, and there's the probability from the AI. So if this stock is in a wave three, which I already like, it's the strongest of all waves. I know a lot of people are taught don't trade the wave three because you don't know where it's going to end. Well, what if the AI could give you a high percentage chance of where that wave three may end? Could that change your analysis? Well, it certainly did mine, and it did to the upside. So it shows this. Where you have a 77% chance that you're going to go up and hit this target. Now, the other side of the coin, which I think, one of the things that you taught me a long time ago, Tom, is risk management. Because no matter how great your system is, and 82% accuracy on documented trades is pretty darn good, but it's not 100%. You're going to be wrong sometimes. So where's your stop? And a lot of people say, well, do you have a stop? Well, the AI does. The AI gives us, hey, if we come down here, this is where it's a failure. Well, notice it's not that far away. So the risk is minimal, and then you have your potential upside. So this is the important part that the AI gives us. So yeah, you joked about the actual coding graphs looking like sonograms. And they kind of do, but nobody needs to know that. I don't need to know that. I tried to understand it, but I couldn't. But I can understand this, and this is the
Yeah,
bottom line. And these are the signals that they give us. And it's just plain old, okay, now we know where the stock's likely to go. Now we know where our stop is. What's the best options trade to put on for this? And that's where options analysis comes in. Do you want to just buy a call? Do you want to do an out of the money butter? What do you want to do from here? But
yeah,
this is the key, Tom. This is the really cool stuff. I mean, who can't understand that? So whether or not you look at all those dot plot graphs and understand that, it doesn't matter. But everyone can understand, hey, I got a 77% chance of this stock going up to 29.19. How can I take advantage of that? What strategy should I use? We can all understand that. I think you would agree. So,
Absolutely. Absolutely.
yeah.
And guys, my bad for I'm checking out the webinar chat, and there are a lot of names I know in this room, a lot of names. One of them had come up. Adrian actually asked a question about what stop loss strategy is being used, and I think you see it right there. I think that's it. I mean, this isn't just a normal stop loss where you take 50% of your option, or you take 10% off the stock price. The AI is going out there and showing you exactly where the fail zone is, which is in essence the stop loss. Am I right, Rob?
100%. And I love the way you worded that, Tom, because I've talked about when people have just a generic system of I'm looking to make X number of percent when I'm right, and I'm willing to lose X number of percent when I'm wrong. You can die a death by 1,000 cuts by doing that. You need to have price levels. You need to have points where, hey, this pattern is a failure, and in this case, it's very close. So you can be patient and wait for the stock to hit its target as long as it stays above the fail zone. Rather than just having, oh, the stock hasn't moved yet, the options are losing value, time decay, etc. I'm just going to close it out and get out. Well, did it violate your stop? Did it violate the fail zone? If not, then you stay with it and wait for it to move to the upside. And we're going to actually show real-time examples of that as we move forward. But that's a great question, Tom. And this is one of the things that's evolved over time. Tom, as well. When I started working with the folks at Hub, and they were giving me AI signals, they didn't have the stop losses in there. They had, here's where the target price is. But this is true AI. People ask about this. Is this true AI? In other words, is the AI continuing to learn? And that is a really key point, I think, to make. This is true AI. It's constantly evaluating the data, is constantly evaluating the winners and the losers, and it's getting smarter and smarter and smarter. And so it's getting tighter and tighter on where the stops would be. So it understands that, hey, if we violate this point, that means this one's likely not going to work and we get out. But as long as it stays above that point, we all know the market moves in impulses and corrections. That's the crux of Elliot Wave to start with.
And
But as
let
long
me
as it stays above that, go ahead.
Yeah, let me interject here for a moment because, a lot of folks in here, especially the folks I know, if they know anything about me, I'm a rules-based trader. And, when you have different levels of trading levels, I always tell people get to the rules-based area, but this is one that's not farther. I mean, you've got, I'm a novice. I start off, I'm a novice trader. Then I learned a little bit about technical analysis. I find out fundamental analysis for the most part is more you're looking at years, where you're looking at years of projection, where technical analysis, you can bring that down into minutes. At that point, I kind of realized, oh, I look at stochastics, or I look at moving averages, or I look at, there's 1,000 indicators out there, folks, and most of them are all lagging indicators. So we're looking at data from yesterday to try to predict what's going to happen tomorrow. And there's nothing wrong with that, but you have to realize that in order to make that an actual true system, you've got to find things that repeat themselves over time, then create a set of rules. When am I going to buy? When am I going to sell? When am I going to take a profit? When am I going to take a loss? That's all something that you can create as a rules-based trading system. What true AI does on top of that is it doesn't just go back and back test that stock on its own and tell you different ways of doing that. I mean, there's been programs out for years that could do that. I didn't invent rules-based trading systems. In fact, I remember the first I used when I first got involved with patterns was back when I first learned about a company called Metastock. And this was back in I want to say it was probably the late 80s when I was looking at Metastock on a DOS compact 386 computer. Boy, we've gone a long way from there. I mean, I could spend hours talking about this, but I want to finish it up on this. Where true AI comes in is it looks at everything that you don't see. It looks at the macros, what's happening outside of that stock, inside of that industry, but also looking at economic values and economic trends. And what did the stock do the last time it got a buy signal? and we were in this or maybe a different economic trend. That's all the stuff that you and I just cannot do. And that's where this picks up. And I'm excited not only for what Rob's showing me, but I'm excited about kind of implementing some of this AI on some of my own stuff. And so, and taking my stuff to the next level. But you're seeing right now the very first of what we're going to have as true AI supported systems and strategies. So that's what I wanted to really kind of summarize on at this point in the webinar, Rob.
Yeah, no, those are awesome points, Tom, and everything you said is spot on. And I'm not aware of anybody else out there that's doing this yet. A lot of people are talking about it. A lot of people are talking about that's where the future is going. Well, the future is here with what we're doing, and the impact of trading AI, how it's changed my trading. It's astronomical. Like I said, I thought I was a pretty decent trader before. But those are the key words, pretty decent. Well, watch what's happened here. Now, if you are someone that likes to be active in trading and you want shorter term trades, before the AI was infused in my system, here is the average length of trade. So it was running 50 days or so was the average length of a trade. So, it's nearly 2 months. That's a long time, especially when you're buying options, because time decay is going to be a factor. This does include the time with COVID, by the way. But here's where the signals from the AI began when we started actually sending these out to alert subscribers. So everything is documented from this point forward. So this is not hypothetical at all. All this is documented. Look at the a difference in the amount of time that it's cut off the trades. So if you're looking for things that occur a little bit quicker, you want more bang for your buck. You want things to happen faster. From just over 50 days, almost 60 days at one point in time, towards the end of 2021 was the average length of time. Now we're at 24 days. So look at the difference that the AI has made in the length that you're in a trade. That's how we could generate the kind of gains that we showed you, over 100% in 6 months, with the average trade length being 24 days. It's
And
because you have
Rob,
a lot of consistent winners.
David was throwing a question out there about a confidence level on one chart that you brought up. Obviously, confidence levels are going to be higher and lower. So, that's something you could look at on a stock by stock basis. But what he needs to realize is that this slide right here, why would you want to put a large amount of anything, a large amount of money into any one trade when you now have not only the amount of times cut in half, but I think you're going to tell us also that what you've also found with AI is it's generating more trades on average. Is that true?
Absolutely, exponentially. And let's take a look at that right now, since you brought it up. So here was the trading activity prior to AI. Watch this, Tom. This is the
Okay,
trading
yeah.
activity since AI. Three
All of a sudden, yeah,
times. Yeah, it's
yeah.
three
That's
times
300.
the
Yeah.
amount of activity. Yeah. So think about that. Let's think about that for a second, Tom. So we're less than half the amount of time in a trade with three times the number of trades. Just think of how that can multiply and compound your account. Less than half the time in the trade with three times the number of trades. Those are the actual numbers. And again, none of this is hypothetical. These are all real documented alerts that have been sent out to subscribers with actual fill price trades. So, yeah, the activity, if you're looking for something a little shorter term and very active, this is where you want to be, because this is what the numbers show. So, yeah, boy, you led me into that one perfectly, Tom. And then here, how about this, Tom? When we have mentors, we want our students to do well. So hopefully you're proud of me here. 19 winners in a row.
Well,
Set a new record. I had not come close to that. Had done well and had multiple winners in a row before. But since we've infused the system with AI, 19 consecutive winners. That's a record. So all documented. all documented trades that were sent out. So I think that's pretty darn impressive. Start thinking about what your account would look like if you had 19 winning trades in a row, and they are. Just to show you, this is on the website evotrader.com. Every single alert that goes out has an entry like this. You can see they all have trade IDs. So here they are. This is the actual listing here of the 19 days in a row. And if you see over our 19 winners in a row, if you see over on the right hand side, a lot of those are pretty short term. Look at the top three: 8, 8, and 2 days. Then we go down to 16 days with Visa there. But yeah, that's the actual results. So um, very active and not a lot of time committed to the trade. The other thing that we want to show here is these aren't hypothetical prices on entries and exits that go out. You can see the word fill there. We know that these are actual fill prices that our subscribers achieved. So on both the entries and the exits, again, this isn't, okay, well, here's a hypothetical price. You should get filled here on the entry and the exit. We send out actual alerts on entries and exits, and then we post actual fill prices. So we know that this is all documented as being correct. So it's been vetted extensively, and we publish the price. So when the alert goes out, it's like, okay, here's where we should get filled based on where it is right now. We all know that option prices move, but then we come back and take it a step further and post what was the actual fill price. So what the price was when the alert was sent out, that's one thing, but what was the actual fill price? That's what matters, because that's what
Right.
really is reflected in our accounts, right? So we show that as well. So in addition to the price you should get filled when it's sent out, then we will post prices that we know were actual fill prices. That helps people compare their brokers too. Like if their broker's not giving them the pricing that other subscribers are getting, and maybe they want to find out what the other brokers are what the other subscribers are using. So
Yeah.
here's some AI case studies. So again, real world trading alerts. So we won't show a whole bunch of these, but here's a few of them. These were actual trades. This one was on IR. So the trade ID, every one gets a trade ID. You can see that the target price there. Look at that AI score, 90%. I got to tell you, Tom, we look for 75% or above are the ones that we're interested in. And
Mhm.
talking about in the beginning, if you have something in the world of trading that's better than 60%, you're considered in the upper echelon of
Yeah. Yeah.
traders. The AI gives you a score of 90%. I start to salivate when I see those. And so the target price there is at 90.85. Then we add in the Elliot Wave with a zigzag within the wave three. There we go. That's my favorite technical pattern, zigzag within a wave three. And so that gives you a target price just underneath where the AI said it was going to go. So here was the entry alert, and also provide commentary. So there in the box there on the bottom right is the actual commentary that I sent out on this, and showing why we sent out the alert that we did. And then we generated a gain on this one. Now, notice that it hasn't quite hit its target price yet, but
Yeah.
we generated over 42% in 6 days. And as you know well, Tom, but I'm not sure everyone knows, there's so many aspects to the world of options. This had 3 straight nice up days. And when that occurs, they inject implied volatility. That's that IV rush that we talked about earlier in the presentation that you can take advantage of. So people always ask, why would you take that off before it hit its target price? You had a 90% chance it was going to hit there. Yes, but we had 3 straight big up days. There was an IV infusion there, an IV rush into the options. Now, if the stock went sideways for a couple days and then went up and hit the target, believe it or not, those call options might not be worth as much as they were when we took it off, or maybe just the same and you waited a little bit longer. Who knows? But
Yeah.
all
Yeah.
those things go into account, and that's the power of having alerts that are sent out for entries and exits. So you get the chart, you get the AI score, you get the commentary, all this goes in. Now, here's one where it didn't quite run Exactly, but watch where the fail zone is. So this is what you and I were talking about earlier, Tom. So we had a 77% chance that this was going to occur. And so here was the alert that was sent out with the commentary. Again, a zigzag pattern within a wave three. We know the market moves in impulses and correction. This one didn't go straight up like the last one did. But did it ever hit the fail zone? No, it didn't. And then look what happened. So this gives you the confidence, it gives you the calm, even if it's going to the downside. This position was actually showing a loss at one point in time. And that makes people nervous, right? Nobody likes to see red in their account. They don't like to see red on a position. But as long as you have something along these lines to give you the comfort and the guidance, it allows you to have the confidence to stay with it and trust it. And in the end, it was a 111% gainer. Now, think about that. It was a loss at one point in time, but it never hit the fail zone that the AI told us that, hey, when you hit this you should take it off. But it didn't go straight to the
Yeah.
target and still generated over 100%. Now, would you give 51 days to generate 111% gain in a
Oh,
trade?
absolutely, absolutely. And
Yeah.
like you said, it's all about not hitting your stop loss. But I mean, you have to know what your stop is going in, and if you're comfortable with that, then that shouldn't bother you at all. I mean, regardless if it hits. I mean, this is a business where you're never going to be 100%, folks. I mean, no matter, I don't care what AI system is out there, and we've got one of the best. But I mean, you think about when I think about good AI systems. First of all, forget about Chat GPT. That doesn't give you financial advice anyway, especially in trading. No, I'm talking about BlackRock. I'm talking about Goldman Sachs and what we have here at Hub. And so, Rob, you've been testing this out with a small group of traders for some time now. How's the response been? What has the response been from the folks who've been following you with these trade alerts?
Once again, you're leading me right into the next part. And here are,
Fantastic.
yeah, the first one there was actually posted on YouTube. So it wasn't just at our website. So they posted it for everyone in the public to see. Nice profits again, 83 days with Evo, average trade 42%. So he's doing better than what we posted. Just simply better than my wildest dreams. Now, check out this next one here. Both of these are extremely recent. You can see the other one was just a couple of days ago. Since joining in December, your guidance has given me over 180% return so far. 180%. So I'm not exactly sure what they're doing with the alerts we're sending out, but obviously they've taken it to a level they're comfortable with. And if you're talking about the fact that we're nearing the end of March, so January, February, March, 3 months, they've generated 180%. Would you be happy with that? These are real testimonials from people that have posted these comments and they've posted them publicly. So, yeah, pretty impressive stuff there. So that's where the rubber meets the road, isn't it, Tom? It's we can sit here and talk all we want, but what kind
Yeah.
of results are the subscribers seeing, and how do they feel? What is their
Oh,
viewpoint of it? That's what really matters, right? So that
exactly.
just gives
So
you.
here we are, Rob. We're about to go into a 3-day weekend. Easter weekend's coming up here pretty soon, and you have decided to open up this to you're opening this up for a small window of time, and you're accepting new members. So tell us what this is all about, what people are going to receive, and of course, I want to know what you're doing it for.
Yeah, 100%. And as you can understand, when we're dealing in the world of options, and people ask us all the time, do you get big enough to where you move the market? In other words, you send out an alert, and if everybody's trying to place that alert at the same time, are you going to move the market? Are we going to be able to get those same prices? So we are opening it up, as you said, Tom, for a limited amount of time for a limited number of people. And that's not BS. That is true. We don't want everybody involved in this because if we do, then it does affect options pricing. We want people that are really serious about this, that want to improve their trading, that want to learn and become educated in this. And the way it works is we go through, we run the scans, I don't run the scans personally. The data scientists at Hub do. They send me the results. And from that, I analyze those results and apply Elliot Wave to them and then decide if it's worthy of an alert. If it is, we send out the alerts via SMS or email. That's exactly what the alert looks like on your phone. So you can see exactly what it's going to look like there. In addition, we don't want you just following alerts. We really don't. I mean, this is a big thing with me, Tom, and I know it is with you too, as your years of educating the average person greatly exceeds mine. Not that I'm saying you're older than me, just that your experience is a little bit greater. But we want people to learn. We want them to understand what they're doing. So we are not just an alert service. We are an educational service that sends out alerts. So the new trades are sent to the website, and along with that, there's commentary in there. Why was this trade selected? And then the chart is posted. What are we looking at? In this case, this is very recent. You can see this was the 15th of March. So this isn't old stuff. And we had two targets here. The Elliott Wave target, you can see there from the tap box there, time and price projection, and the AI target were exactly the same. So they gave us the same target price. Now, what kind of confidence does that give you? And then one of my favorite confirming indicators, which is the DMI, was constructive as well. Says, yeah, this is likely to happen. And it did. And that was a very short term trade. So we send you out all that information. When an alert goes out, it's not just, hey, here's an alert, do something with this. It's this is why we're doing it. This is what the target price is. This is what we're expecting. We give you the details. We give you the educational background from it. We review every position every day. We'll send you out adjustments if we need to. So all included with entry alerts, which I know there's services out there that they just send you out an entry alert and then you're on your own from there. But we send out alerts for entries, any adjustments, and the appropriate exits. Like I said, on that one example, we actually exited before the target was hit. Why? Because the IV rush occurred. Would the average person know that? Would the average person know there was an IV rush into those call options? I doubt it. So that's the stuff that you learn from experience and you learn over time and you learn from receiving these and understanding the commentary that's being sent out. And then you look for that in the future in your own trading. So we also post commentary from time to time. I'll post a comment about a particular issue. Here's what's going on with this stock. Here's some news that we should be aware of. Things like that. So there's commentary that's included. All of that stuff is included in there. And you have the opportunity to ask questions at any point in time. We have support that works 24/7, so you can send questions out. In addition to that, we have a live Q&A twice a week. We do it on Mondays during market hours and on Thursdays after market hours. So two sessions where you can actually ask live questions. So not only do I go through and give you an update on what's going on in the market, you can ask questions. You can do it by voice or type them in, whatever you're comfortable with. But two live opportunities in addition to the support that goes on 24/7 where you can send in questions. So all of that is included, along with what we really pride ourselves in, which is some quality education. There's a lot of education out there, but we do it by video and text. We have premium and mastery courses. We have three main primary strategies. The impulse strategy is the one we've been talking about tonight, the AI infused directional strategy, focusing on zigzag patterns. We also have a volatility strategy, which finds stocks that are about to break out. We have a time strategy, also infused with AI on stocks that are expected to stay in a trading range for those of you that enjoy sideways trading. And we have education on all those, so you understand them all. And if you are newer to Elliot Wave, what is this Elliot Wave stuff? Well, we can guide you through it. We have a core educational class. We can go through a deeper dive in our impulse mastery, and then we can get to the cream of the crop, in my opinion, which is trading zigzags. They're only 3 waves long rather than 5, and we'll educate you on all of that stuff. The mastery classes are normally an additional cost even to our regular alert subscribers. So the core classes like Options Bootcamp and the Jumpstart are included with the alert subscription, but the mastery classes are a deeper dive, and those are additional costs. We have people that come to our website that aren't even alert subscribers just for the education, and that's 100% true. Now, we also go through our confirming indicators. You taught me this a long time ago, Tom. You have to have a trading system. You don't rely on any one indicator, no matter how good you think that indicator is. No matter how great I may think Elliot Wave is, you have to have a system behind it. And here are some of my primary confirming indicators that go along with Elliot Wave. And that was even before AI came to be and infused into it. So we include these so that you understand your master classes on these individual confirming indicators that are utilized to help design whether or not we're going to send out an alert. So our offer here is our impulse alerts, which includes the email and text alerts, the chart analytics on every position, and the trading plan. You got to have a trading plan. You got to follow it. 2 live sessions with live Q&A, the premium education courses that go along with it. And the cost of that is $1,778, $1,778. But for those of you watching this now, and this is going to be very short term, you can see this ends April 12th. And this is not BS. I know you have like Black Friday specials and Saturday, Sunday, Monday, all the prices are still the same. They try to coerce you to buy something on Black Friday. Now, these prices will go up on April 12th. I can promise you that that price will go up to the 1778. You actually can go to our website and see that on our website. So you're saving 33% if you sign up between now and April 12th. What that equates to is $99.75 a month, less than $100 a month. So less than going out and having a nice dinner with your family.
A mediocre dinner is going to cost that.
Yeah, you're 100% right there, Tom. I mean, with some of the dinners that I've paid for recently, it's just like,
I mean,
wow.
you can think about it. A family of four at McDonald's, you're approaching $100. If you're going for the bigger end value, they don't even call them value meals anymore. They don't make sense. But
They
Rob,
used to be, isn't it? We're dating ourselves here.
yeah. So you actually have one of your sessions you're going to be doing with members in about a little more than 5 minutes. So you're doing your Thursday night piece with the members. I know we don't have time for a lot of questions. Let me just fire a couple things off to you real quick. Mike was asking, actually, I'm going to the Q&A part. There's only 4 of them. And then if I have time, I'll look at the webinar chat. But Mike was asking how many trades are taken during the 6-month period.
Well,
Is it an average of 1 a week or 2 a week, or what are we talking?
it averages about 3 a week. So
Wow. Okay.
yeah,
All right.
that's the average.
And if you're rotating these, let's say in less than a month, so about every 3 weeks you're rotating out your trades, because if your average trade is 24 days, that's a little bit more than 3 weeks. So you're looking at about maybe having on in an open position on average about, let's call it 6 to 9 trades on average in your open position when you take that long-term look. So and obviously sometimes you have more positions on, sometimes you have less. So on average you're spending less than $5,000 across these trades if they're all at no more than $500 a month. Correct?
Yeah, and you bring up some really good points, Tom. And one of the things that I learned back in my days as a golf pro, which was my career before I started trading, is the aspect of turning over your inventory. That's why Walmart is so successful. And this comes to the same thing. You don't have to have huge winners. If you have a lot of small, consistent winners, you're turning over your portfolio. If you're only in the trades 24 days, you're rolling your portfolio basically every month. The results that we showed you were non-compounded. Just
Yeah.
imagine if you compounded them in your own account. Now, that's up to you. That's everybody's own risk tolerance. But the reason that Walmart is so successful, they discount things dramatically, right? But they
Yeah.
turn their inventory a lot. And that's how they generate profits over time. So it's that turn. And you brought up a great
Exactly.
point. You're turning your account often
Yep.
because of the length of time in the trades. So even though the average return was what, 29% per trade, if you're doing that, multiple times a month and you're turning your account every month and you do choose to compound, you can just place the multiple on where you're going to be from there. So
Yeah.
you raise a great point, Tom.
There's a
Um,
link on the screen on EWO support. If you guys are interested in the offer, you can click right there. It'll open up the page, similar to the slide that Rob is showing now. How much time do you have to allocate to these trades every day?
well, the average person doesn't have to spend much time at all.
Exactly.
They just can follow the alerts. Yeah, so it's
It's like 5 minutes, right? You read the
right.
alert.
Yeah, 5 minutes or
Yeah.
less in the
If you
time it
like it,
takes to yeah to post the alert, and then from there they can go back and read the education whenever they want. They can read the commentary.
right?
If you're doing other stuff during the day, you just post the alert, and then you go back and read about it and learn it at your leisure. We're going to sweeten the pot here a little bit, though, Tom. Look at this. Now, this is how much of a believer I am in this system, and that we are here. We're going to offer you a guarantee, and that is that we will have a better than 70% win ratio. Now, who does that? I've not heard of this anywhere out there, but we're going to say that we're going to promise you a better than 70% win ratio over the 12 months, or you're going to get another year completely free.
So this
So
is based on the year. So over the next year, if they don't get 7 out of 10 trades minimum that are winners off of the entire group of trades you've published, then the next year's on you.
the next year's on us. Absolutely. Yep.
That now that folks right there, that is a guarantee that you're not going to find anywhere else. This isn't one of those, if you don't like it, if you don't, I mean, Rob's really putting a year's worth of work. Him and the AI are putting a year's worth of work in on this. And I think that is a fantastic, that just shows you how much he believes in what it is that we're doing here at Hub. And I want to mention something else too. And I saw somebody throw some comments up about Gemini and about OpenAI. And the thing is that you're talking about two different AI programs. All right, you're talking about one that's a collection of everything, the good, the bad, and then you're talking about a proprietary inside the box artificial intelligence that's been built from the ground floor. That's what this AI is. We control the good that goes into it. Garbage in, garbage out, and so you're going to see a lot of what I like to call them deep fake AI. A deep fake AI is something where someone tells you it's AI, but it's really just them fancying up their version of technical analysis. This is not at all deep fake AI. This is real AI that's been built from the ground up at Hub. And the proof is in the pudding. I've seen the before and I've seen the after effects of AI now being used with Rob stuff. It's phenomenal. It really is.
Yeah, Tom, and you're a great person to give a testimonial because you were around in the very beginning, right? You knew what I was doing before, and you've seen what I've been doing since. So having you on tonight is just phenomenal because you can give personal testament to the power of this, and adding in the education. We're going to add in the Impulse Mastery class, the Zigzag Mastery class, and two 90-minute practical application classes where we're going to give out real trade alerts. And so the value for that is 11.98 just for that. But we're going to give you that absolutely free. So you're going to get the alert service at the 33% discount, the guarantee of a 70% win ratio, and all of that education, which people do go and pay on our website for. We have proof of that. People just come from YouTube, et cetera, and just buy our education. All that for free. Now, one caveat here, you have to take advantage of this right now because after March 29th, including all the education, is going to go up $395. So this is an act now. Don't
Okay.
wait. No reason, take action now. And if you want to see what the page looks like, here's exactly what the page looks like. So when you go to the offer, you can see it right here. And then scroll down. All these different things are what we've covered tonight, Tom. There's a whole bunch more testimonials. We only showed two because we have limited amount of time, but there's a whole bunch of them scrolling across the screen there. But the bottom line is you come down here, we're calling this the Impulse Pro Series, and you can come down here, give us your information, details, and if you want all that education included, you have to act by what is it? The countdown clock is on. 11 hours and 12 minutes you have as we speak. So don't delay. It's a $400 value to take advantage of it tonight. Otherwise, then the educational value goes up. What is the value of education, Tom? I can't put a
Yeah.
price number on the education that I learned from you 27 years ago.
Well,
With
that and
what it's done
experience.
for me in my life. There's no way to put a price tag on that.
Yeah.
So yeah,
And
so education is.
it absolutely is. And so is experience, Rob. And, I think that, if we were to look going forward with all the stuff that's happening, and AI really starting to just show its emphases, to me, and I know you've got to be thinking about this. So I'm going to end it with this. Um, we're living kind of in that age of chaos, and distrust. And I think social media has a lot to do with it. And AI is really going to make it more confusing. That being said, millions of people, I think, are trading now and or will want to learn how to trade here within this particular decade by the time we get to the end of the 20s. Now, many of these people are going to want some kind of AI type of software, screens, tools, metrics, whatever you want to call it. Most will be trading with what I think that I've been calling tonight deep fake AI software, which is nothing more than what we've seen decades before, which is just a kind of a different look to technical analysis. Very few will be actually using real AI systems and strategies like the ones you've seen tonight, folks. We hope to see you as our next member. Thank you, Rob. I know you got to go. You're already late for your meeting with members right now. So thanks for showing this to everybody. Thanks for joining in. And once again, folks, if you are interested, the link that's on the screen, let's put that up again if it's not already there. And
Yeah, no,
those of you can check out all the details that Rob talked about there on the screen here toward the end of this particular session. But thank you, Roland. Great seeing you. Nader, hadn't heard from you in a while. Someone was asking, is it tax deductible? Yeah, I mean it is, but you need to check with your accountant to make sure. Depending on who you are, it can be tax deductible. Let's put it that way. All right.
that's a great
Any other
point, Tom,
questions
from
you
an
have?
education standpoint. Yeah, absolutely.
Yeah.
Check with
Any
your tax advisor.
And any other questions you have, we do have an email. I'm sure that you guys are welcome to ask questions on. I believe there was even a phone number that rolled by here. Am I right?
You are, and I will bring that up. It's
There you
right
go.
there. And the email is if they have questions, support at evotrader.com. If they have questions on the AI software, it's support at hub.com. If you have any questions regarding the offer, there's the account services name. Ask for Stephen. And he's the expert. He'll get you set up with the very best price that is available. So yeah, there's the
All
phone
right.
number. Ask for Stephen. He's awesome. He'll take great care of you.
Okay. Well, thank you very much, Rob. I know you got to go. You're probably 5 minutes late right now, getting in with you guys. What are you talking about tonight?
Actually, I can show the folks this right now. We're going to talk about
Okay. Some of them are here
here's
right now, I bet.
yeah. While people that are still here, here's an alert that we're probably going to send out. This was an AI score that just came in today, but going into holiday weekend, we'll wait and see where it goes. But look at this setup here. So here's the first zigzag pattern, and then going from there, we're going to look at The second pattern here that shows you, there's the first one that I just showed you, which shows that was a complex A wave in the next one. So it looks like Alaska Airlines, and we had profitable trades on both Delta and United. So why not bring Alaska in? I mean, the AI is saying, hey, the airlines are going up, and they've been right. So that looks like what we're gonna. So there you go. There's proof in the pudding. There's a
Okay.
live potential alert. What do you do from it from here? Well, that's up to you. But that's something that we're going to be showing our subscribers tonight as an alert that'll probably
Okay.
come out on Monday, as everybody knows tomorrow's a holiday.
All right. Well, so let's let you get going. Thank you all for joining. I appreciate it. Thank you for all the great comments, guys. Some of you haven't seen me. I haven't seen your names in quite some time. I appreciate the shout outs. Once again, if you're interested in this, you can click on the links that are given by eWolf support there in the chat, in the webinar chat. And of course, if you have questions, you've got an email there, you've got a phone number there. Thank you all for attending, and we'll see you soon. Hopefully, as new members. All right. Bye, everyone.